All right, good morning, guys. D-Rock, nice trade. How's everybody doing this morning? All eight of you. It's Friday. That's all right. Hopefully, you guys like made my money. I'm going to the golf course, going to the gun range, going to the nude beach, whatever makes you happy. Welcome. Glad to have you guys here today. It is Friday. We made it through the week, guys. We've done the same thing every day. We've talked about patterns and advantages, and we're probably going to do it one more time. For those of you that are interested, as much as I hate to dissuade people from being in my room, John Novak is going to be trading the S&P live starting at 10 a.m. today. I'm not exactly sure. Let me look at. There is a live trading room. I'm going to copy the link. I'm going to tell you right now, guys, it's not anything more than we do here. You're just going to see it live. Um, So John Novak's going to do that. It's fun to watch him because he'll talk through everything that he sees. He'll talk through the advantages. He'll talk through stop placements. I like it. We chit chat every morning about it, and I think that starts at 10 a.m. So you won't hurt my feelings if you want to go see the guru. Um, Not at all. I'm letting him know that I may be sending you guys over there. Guys, so we're going to go through it. We're going to look at the same stuff that we look at each morning, just systems and routines, right? Getting to the point to where everything becomes automatic, whether it's your chart reading, whether it's your preparation for the day. Maybe you wake up and you have a cup of coffee and you grab it with your left hand, you pour cream with the right hand. I don't know, whatever makes you happy, whatever settles you in. Part of my routine is making sure that I'm not trading into news. I don't care for being in positions. And with Apex, you're not allowed to anyway. And they do that because it's a bad idea to jump into that bubbling cauldron of emotion, right? So Friday the 13th, 9 a.m. FOMC Harker is speaking. That's medium impact news. That could have an effect on the markets. And then at 10 a.m. we do have that high impact news. And those are typically the ones that make it jump and bump and spike, and make it just a little bit untradeable, even when the patterns hold through. Sometimes it's just too fast to react, too fast to get a fill. You get slipped horribly. So every morning I go through and I look at my news, and then I direct you guys over to the tutorial section, guys. And this is where everything that I talk about comes from. I say it all the time. There really are no secrets. I don't want to keep secrets from you guys. I want to give you everything that you need to be successful. Because when you're successful, you're happy. And when you're happy, you tell your friends. So everything that I talk about comes from the tutorial section. All the rules that we discuss, the indicators that you're looking at, for you guys that are curious about trades beyond the high probability trend trade, everything's available for you right here. It's just a little seek and find to get there. But what we're going to talk about this morning, just like we did yesterday, and just like I'll do Monday, because I believe that repetition creates recognition and confidence, is we're going to talk about a high probability trend trade. We're going to talk about a trade that when you follow the rules typically wins 70 to 80% of the time. This is a trade that develops confidence in new traders. This is a trade that really puts you in a position where you can read your charts. And these high probability trend trades are defined as when each indicator on every chart agrees for the trade. Your triggers will be their strongest. There will be nothing, no termination conditions in the way, nothing between you and your target. And this high probability trade really isn't designed to be the end all be all of your trading. It certainly could be, and you could find a tremendous amount of success with it. But this high probability trend trade just really develops the skill set of making you a chart reader. And I don't know if you guys know this, and I recognize every name in the room right now, but um, day trading isn't about being active. Day trading isn't about who's in the market the most. We are professional waiters. We are waiting for our plan to come together so that we can execute. We're waiting for advantages to be present, and then we pull the trigger. And you can't put the cart before the horse. You can't say, I want to be in a trade, and enter the position and then start looking at your indicators and hope that they agree with the trade that you took, it goes the other way. So becoming a chart reader makes it easy for you to identify these advantages. It makes it easy for you to recognize three very simple concepts. You will be able to look at your workspace and you'll understand where the market is likely to continue. And that continuation point is where you will enter. That becomes your entry for the highest probability trend trade. You'll also understand where the market is likely to go. D-Rock showed a great example of that this morning with his trade. He knew that with the momentum, with the direction, with everything pushing the market up, that he could hold his second target for that Fibonacci area of resistance and make a little more money than I did on the trade. And then you're going to understand where the market is likely to stop when price reaches one of those Fibonacci areas. And your trigger lines tell you, sit on your hands. These are all three things that you're going to be able to really look at your chart and understand at a moment's notice. And the more you focus on them, the easier that they become. But this is what becoming a high probability trend trader does for you. It teaches you to read your charts, um, and it keeps you focused on the best of the best because confidence really does come from the memory of success. And if you're taking trades that typically win 70 to 80% of the time, you're experiencing a lot of success. You're feeling that confidence, and you're excited about staying the course. So we're going to talk about the high probability trend trade, and it's only three rules. Simplicity is a big part of what I do in this room. My idea is to avoid confusing you guys as much as possible. So three rules are going to get you into a high probability trend trade, and each rule individually provides an advantage. Your first rule says that you must have strong triggers, and when you have them, you have the advantage of momentum. Your second rule says no termination conditions, and when that's true, there's nothing between you and your target, you have a clear path. And then finally, rule number three is going to have you using limit orders at areas. And by pinpointing where you're entering the market, you will have the advantage of the entry area where the market is most likely to continue, the absolute best of the best spot. And individually, these advantages are pretty awesome. But when you piece them together, that's the recipe for a trade. And that's exactly what we're going to talk about. We're going to talk about these three rules. And I'm going to remind you that this can be accomplished on only two charts. Everything starts with a large chart. The large chart leads the way, however you want to say it, to make sure that you look at that big chart first, because the large chart is going to define direction, momentum, and areas through one bar. The most current bar on your large chart is going to give you all of this information. It's a broad stroke of a brush. It's a slower moving chart. There's a lot more action in one bar on a large chart than there is on your smaller charts. And this is going to show the overall opinion of the market. I'm going to show you. The large chart reflects the opinions of the large crowd, the people that move the markets, the people with money, the people that are focused on running these institutional trading firms. Guys, they're going to create trends and they're going to create momentum and they're going to react to areas. And then the second half of what we do is literally taking the advantages that they provide, the advantage of momentum through rule number one, the advantage of a clear path through rule number two, and then we're going to refine that broad stroke of a brush all the way down to the point where the market is likely to continue. And this is where you're going to pinpoint your entry. This is where you're going to be able to get in with the least amount of risk, with the highest profit potential. And that small chart kind of reflects what the small crowd wants to have happen. The people that aren't in control, the people that can't stop the momentum or the direction, the people that simply want to fight. And they push next gen users to that great entry, to that best of the best entry. So we're going to talk about two charts. Big chart, little chart. Big chart always leads the way. Your first two rules are met on the big chart. And we're going to focus on the advantages individually so that you can piece them together to create that trade. And I'm going to share with you guys the path to becoming confident. I say this every day. I encourage you guys every day to participate in class because you need to post your trades in room. The person that posts the most typically gets to where they want to be. The person that's not shy about worrying what the rest of the world thinks about them if they post a loser, these are the people that start reaching their goals pretty quick. We're going to spend the first hour learning the trigger line and the Fibonacci rules for when it's okay to trade. We are going to visually and verbally understand the advantages so that you can recognize them at a moment's notice. Good morning, Miss Debbie. You guys are in charge of simulating your trades daily and posting pictures in class until you're sure that you have the correct rules. And this is such an important part of what we do, making sure that you have the correct rules. Rules are tested and back tested, and they're proven in research to win more than they lose. That's how they become rules. They become rules because over a sample of 100, 70 of them won. So you want to focus on having that statistical advantage each and every time you enter the market, and you will break them from time to time, and you will get lucky from time to time. And that truly is one of the worst things that can happen to a trader is to deviate from a proven plan, but still find success because it tells your brain that you should be breaking rules more often and forfeiting that statistical advantage. So post everything in the room. We'll talk about the great stuff, we'll talk about the bad stuff, and we'll refine and get you closer to where you want to be. We're going to simplify heavily today. We're going to talk about the high probability trend trade extensively in the first hour. I want you to raise your hand and ask as many questions as you have, as I do. Nothing is off limits in this classroom. You need to understand what looks you're going to commit to. You need to commit those looks to memory, and you're going to do that through repetition, guys. You're going to do that through picture taking. You're going to do that through question asking. And that's why posting your trades, posting your pictures with questions, posting your chart reads in the class is the greatest thing that you can do for your education because the reality is I'm here 15 hours every week. And my sole purpose in life is to give you feedback on anything and everything that you do. You have a private session with me every time you post a picture. We'll talk about what was great. We'll talk about what had challenges. We'll focus on omitting the challenges from what you're doing so that you can focus on the great. And you and I have a conversation through those pictures. The second thing that you're going to do is you're going to post or you're going to track your real-time performance in the spreadsheet. Nexgen gave you the spreadsheet. It should be inside of your Nexgen Study Picks folder. If you can't find it for some reason, guys, let me give you mine right now. I'm more than happy to share. Mine's filled out a little more than yours is. Look at the links. But your spreadsheet's a trade journal. That's all it is. So every time you take a trade, you're going to pop it into the first tab of the spreadsheet. You're going to talk about the advantages that were present. You're going to talk about any disadvantages that may have been present. The spreadsheet will discuss the results, and then there's this place for notes. And this notes section is where if there was a challenge, you're going to write it down. Or if it was the absolute best of the best, you're going to put, don't miss this setup, right? And what you're going to do is every morning you're going to come back and look at what you did yesterday. And you're going to ask yourself, what worked? What kept finding success? I know that when D-Rock goes back tomorrow and he looks at his spreadsheet, he's going to say to himself, this is the absolute best of the best. This is the pinnacle of what I can do in my trading plan. And this was an easy $380 to get me to where I wanted to be, right? So he's going to be focused on odds favorable momentum, and he's going to be focused on terminations that reverse the market, and he's going to be focused on clear paths, and he's going to try to repeat this until he meets his goals, and that's an outstanding way to do things. And then there's going to be what didn't work, and I guarantee we all do, D-Rock. It's pretty amazing. So D-Rock, did you do this exercise today? Did you go back and look at where you traded into that termination condition and say to yourself this morning, no more. I'm not going to do that today. I'm going to avoid those termination conditions and I'm going to make sure that I have a clear path. And what an outstanding start you had to the day. So it really does work, guys. I can't stress this enough. I wish I had done this when I started with the software. It took me almost 6 months to do this because I was a little lazy. Hey, John Novak. What felt easy? What kept you relaxed, right? I guarantee, D-Rock, you were pretty mellow during that trade. I know I was. And then what felt forced? Typically, when you break your rules, guys, your body, your anxiety gets it and recognizes it before your brain does, and you'll feel those sweaty palms and those butterflies. So do that brief historical study each and every morning. Make sure that you know what you're looking for and know what you're avoiding. And then as you develop Your plan is you start recognizing these looks more and more. You'll start putting them here. Say, this is my personal trade setup. This is my absolute best of the best. This is the one that I'm never going to miss. And I guarantee you, once again, sorry, D-Rack, I'm putting you on display today. I guarantee you this picture, D-Rock took that link and went to his spreadsheet to his personal trade setups, and he probably said something clever like best of the best. I love that phrase, best of the best, right? And he's going to look at that and he's going to make sure that he's doing it each and every day. And then the final page, guys, this is, hey, good morning, D-Soap. Um, The final page is, first of all, about 250 pictures of clients using the software, of clients finding success with momentum and a clear path and entry areas. I always encourage you guys, go look and see what other people are doing. It's important to see what can be done with the software, especially when you're holding yourself back and keeping it simple. Once you become a chart reader, there's really nothing that you can't do. Some of you are going to break off and want to trade the NASDAQ. And the NASDAQ is about twice as fast and 4 times the movement as crude oil and the S&P. And if you're not real comfortable, it could be problematic. But there's a lot of my study in here that I shared with you guys that want to do it. There's a lot on when to hold for bigger moves, management, working on the management from these great entries. A lot of chart reading, just kind of, you're going to see patterns over and over. These are them. And then a whole bunch of termination conditions. And these are the Mark Novak section because um, I had no idea that I was trading into termination conditions the way I was until I posted in class, until I got that great feedback. And then it allowed me to change my habits a little bit to get to where I wanted to be. So, pretty easy path, guys. We're going to learn the rules. You're going to take a million pictures. We're going to talk about each and every one of them. And everybody reaches their goals. That's the plan. If you're brand new with me, whether it's a week, a month, a year, you're brand new until you're making money consistently. I want you to participate. I want you to create a discussion in this room rather than relying on it to be a lecture because interaction is going to help. Everybody learns at a different pace. Everybody hears things differently. I can say termination to Anthony, and Freddie has to hear likely to stop the market. It's the same thing, but they hear it differently. They react differently. So if you need something said another way, make sure that you raise your hand and say, "Hey, Mark, let's talk about what you just talked about." We're going to start with rule number one because it seems like a great place to start. On your large chart, you need strong trigger lines. Um, and if you have them, there it is in yellow, that becomes your advantage of momentum. So let me get to my chart reading section. A lot of you guys are like, oh, Mark, we heard this yesterday. You're going to hear it tomorrow too. First thing you're going to do is you're going to determine which way the market is moving, guys. You're going to see which way the large crowd wants it to go. If the background on your large chart is green, you're in an uptrend, and you should only be looking for your rules to be met for a high probability trend trade long. If the background on your large chart is red, you should only be looking for rules to be met for high probability trend trade short because you're in a downtrend. One of the great things about what we do, guys, is we don't care if the market's going up or down. We're going to make money both ways. And it's nice to be able to do that. So this is the first thing. You can't have strong trigger lines if you're fighting the trend. So let's look at crude oil, guys. What direction is the market trending right now? And it doesn't mean that there's a long trade to be had, but we can identify that the people in charge in the moment very much want the market to go up. The background is green on the most current bar. We are in an uptrend. I'm only looking for rules to be met for high probability trend trades long. On the S&P, it's the exact same thing. Everything is green. The market's screaming up. Guys, we're in an uptrend. We're only looking for rules to be met for high probability trend trades long. That really is the easiest lesson that you're ever going to get. Trade with the trend, right? It's easy to identify. And the only way that you can have strong trigger lines, the only way rule number one could ever be met is if you're trading with the trend. So what's a strong trigger line? A strong trigger line means that your small trigger lines, these solid lines, they work together. It's not two trigger lines. The two trigger lines form your small triggers. Your small triggers are up, they're wide, they're angled in the direction of the trend. Your large trigger lines are up, they're wide, they're angled in the direction of the trend. And then it's the space that's created between the small and the large. It's that gap between the two that lets me know that the odds are favorable for this market to continue in the direction of the trend. And you're going to hear me say odds favorable momentum all day long, guys. OFM, odds favorable momentum. And the cool thing is that when I have odds favorable momentum, this is the absolute best look for buying Fibonacci support on that smaller, faster chart to continue with the trend and the momentum. Next gen users, you will be able to pinpoint where these little tails on the large chart are most likely to occur. One bar on your large chart is 15 to 30. This is that refinement. This becomes your entry for the best of the best. This becomes your entry for the best of the best. And in a downtrend, it's the exact same, flipped on its head. The small triggers are below the large triggers. The trend is down. Both are wide, both are angled in the direction of the trend, and it's that gap between the two, the space between the two, that gives me that strong trigger look, that lets me know that the odds are favorable for the market to continue down. And when I have this much momentum, the large chart is going to form this little tail, right? It means that price came up and came down. It just happens in one bar. We don't trade the large chart, right? We're just getting the information. These tails will be pinpointed where they're most likely to happen through rule number 3, and that becomes your entry for the highest probability trend trade, going with the momentum, with the direction. So guys, this is strong trigger lines. Smalls inside of the large is not odds favorable momentum. That's what we call weak triggers. When those smalls return to the large, when they break inside of the large, it's a weakening of the large triggers. Anything can happen up or down, guys. This is the polar opposite of strong trigger lines. Strong trigger lines mean that market's likely to push up. We'll look for opportunities. But when the smalls return to the large, anything can happen up or down. We lose the advantage of momentum, and we're no longer looking for a high probability trend trade. So being able to distinguish in the moment between the two, is there separation? Are they one on top of the other? This is going to give you a clear path to the advantage of momentum. And then I've got one more picture that reminds you that 90% of your day is spent waiting for advantages. Whoops. And that was the wrong picture. Hold on just one second. Get up there. There we go. Um, Starting on the left-hand side of the screen, there is odds favorable momentum. That market is pushing down. It continues to push down with all that force behind it. And then your small triggers work inside of the large triggers, and you'll notice that it says anything can happen, ACH. And it precedes a reversal in the market. There's no reason to hope, to want, to wish, right? We know that we've lost the advantage of momentum. You guys will sit on your hands. Eventually, it comes back. But it comes back the other direction. And sure enough, there's one of those tails, one of those potential entries with all that momentum, and the market continues up. And then we get anything can happen triggers. Once again, we lose the advantage of momentum. It precedes a reversal once more. But after the reversal, we do get that odds favorable momentum. We do see one of those tails, one of those potential entries. It's doing nothing when there's nothing to do that makes it easier to capitalize on the money to be made with the momentum. And then this particular market comes into a transition phase. There is no agreement. It's not odds favorable momentum. The trigger lines don't agree with one another. At some points, the trigger lines don't agree with the trend. And guys, this is where a lot of people get tempted to predict whether the market will go up or down. They want to hope it goes in the direction that they want it to go, but they don't really have the momentum. And this is where a lot of people, and some of you experienced traders have probably been through it, get chopped up in consolidation or channels or whatever you want to call them. Rule number 1 gives you a huge advantage to not get caught up in these areas. And if you sit on your hands and do nothing, let them fight it out, eventually somebody wins. Eventually that odds favorable momentum comes back to you. So that's rule number 1. That's the advantage of momentum through strong trigger lines. Let this lead the way because momentum will even cover some mistakes that you make. And then we have rule number two. And rule number two says termination conditions false, room to profit targets true. So what that means is we're not trading into those areas likely to stop the market that your chart reading is going to tell you about. We're not trading into termination conditions because they may reverse the market. So let's talk about what termination conditions are, and why they're such an important deal. I'm going to get my termination conditions section set up, guys. Areas that may reverse the market. Blue Fibonacci support, red Fibonacci resistance, yellow one-to-one dots. It can be the cyan divergence high lines. I'm sorry, cyan divergence low lines, magenta divergence high lines. These are all lines on a chart that may reverse the market. These are all lines on a chart that you're going to see before you ever get to them. Divergence highs, this magenta line. Divergence lows, the cyan line. Yellow one-to-ones, red Fibonacci resistance, blue Fibonacci support. And what this does for you is it allows you to identify, long before we ever get there, these areas where the large crowd is going to react, where the people that move the market, the people that create trends, that create momentum. With all the momentum and that up push, these yellow one-to-ones represent a spot where maybe they take profits, or maybe even the sellers enter twice as many contracts because they want it to go down. We don't know what's going to happen at the areas, but we do know that decisions get made at key Fibonacci areas. Decisions get made at one-to-ones. Decisions get made at divergence high and low lines. So we need to protect ourselves by being able to recognize the decisions. And we're going to do that with a simple comparison of price and the trigger lines, the same trigger lines that gave you momentum. So anytime I reference price reaches an area, anytime we talk about price in the market, we're talking about these dynamic Renko bars. We're talking about the most current price. And if you look at the live market, the most current price is 43.93.25, right? This bar is nothing more than a reflection of price. That's all it is. So what we want to have happen in order to determine whether or not this Fibonacci support is likely to hold or break is we want price to reach that area, because when price reaches it, decisions get made. Price reaches Fibonacci support. All you have to do is ask yourself, where are my trigger lines? Are they above support? Are they below support? Are they breaking through support? If all of your trigger lines remain above this area of support, guys, you've reached an area that may stop the market, that may create an untradeable bounce, that may be a point where buyers and sellers fight it out. Price reaches, triggers remain above. Next-gen users tell themselves, no more short trades. I'm not going to trade into an area that may reverse the market. And you can see in this picture, look at the bounce that happens right off of Fibonacci support. So this is the recipe for identifying a termination condition, making sure that you don't trade into an area that may stop the market. This divergence low is created on a pivot. There's a loss of momentum. That's all it means. But price didn't reach this divergence low. Price created this divergence low. It's when it returns, it reaches the area. You ask yourself, where are my trigger lines? In this case, they all remain above this area of support. No more short trades. Don't get suckered into trying to break through an area that's telling you it may reverse the market. Sure enough, this termination condition, this pivot stop out, does reverse the market. Ultimately gives you odds favorable momentum. This is a strong bottom, guys. This sets you up for the highest probability trend trade that you can take. And these pivot stop outs become very powerful. And then this next picture, this is your 90% of the day is spent reading indicators. 90% of the day is spent waiting for advantages. And I'm going to use some arrows on this one, and we're going to talk about exactly what we see over the duration of this market movement. The buyers are in control. They're pushing up. Everything says up, and then they reach Fibonacci resistance. Once they reach Fibonacci resistance, you guys are asking yourself, where are my trigger lines? They are all below. So you're saying to yourself, I'm not going to take a trade long. I'm not going to trade into an area that may stop the market. And then the buyers are relinquished to their power, and the sellers push down as hard as they can. and they push directly into Fibonacci support, and absolutely none of the trigger lines follow. They don't get below, they don't break through. Next gen users know I'm not going short. My rules say sit on my hands and wait for the reaction. And this is where people start to get a little antsy. They're like, oh, I can't go long, I can't go short. How am I ever going to make money? And then the buyers push again and they reach Fibonacci resistance and none of the triggers break. And they reach that divergence high line and none of the triggers get above. And that second area of resistance, and once again, three termination conditions in the same area. So guys, we're embracing the rule, the idea, the recipe. Price reaches an area. If your trigger lines do not get through that area, no trades into it. This termination condition creates the full reversal, right? Large triggers go from red or from green to red. Smalls get below the large. It creates that space between the two, showing me momentum. Price hasn't reached that Fibonacci area down here. My path is clear. And there's one of those tails. There's one of those potential pullbacks for the highest probability trend trade that you can take. Terminations from highs that create full reversals are what we call strong tops. They happen all day. You just have to wait for them a little bit. And finally, one more. Price reaches one-to-ones. None of the trigger lines break. Absolutely no short trades. Thank goodness. Look at the fight that ensues after. So guys, that's how you're going to identify whether or not an area is likely to stop. If the triggers reach it and none of the triggers break, sit on your hands. Do nothing. Wait and see what happens. Areas hold all the time, but areas break all the time. If they didn't, we'd be caught in these ranges nonstop. When do we consider an area broken? When both the small and the large triggers get to the other side of the area, an area is considered broken and the path is now clear. So when both my small triggers, the solid lines, and my large triggers, the large lines, get above resistance, you'll see that it begins to act as support. The path is now clear. The area is broken. We're looking for our rules to be met. And if you look in this picture, it breaks with odds favorable momentum. There's one of those potential tails, guys. So it's really a pretty simple recipe for termination conditions. Price reaches the area. Where are my triggers? If they don't break the area, I'm not trading into it. If both my small and large get to the other side of the area, I will consider the area broken. My path is now clear. I'm looking for my rules to be met for that high probability trend trade. And then finally, there's a third option, guys, and this takes you outside of the realm of high probability. When your small triggers break through the large triggers, when your small triggers smash through the area that you're wondering if it's going to hold or break, but the large triggers remain below, this lets me know that the area has the potential to break because of the odds favorable momentum. You're going to see this a lot. This is what we call a 50-50 look. And a 50-50 look simply means that 50% of your triggers are through and 50% are not. It has nothing to do with your chances of success in a trade. It has everything to do with the relationship of your trigger lines to the area. You could call it the straddle or the one above, one below. But when I have odds favorable momentum, guys, this is imperative. When I have odds favorable momentum and my small triggers smash through the area, not just peek their head through, but literally just laser beam right through it, this area has the potential to break. But since it's not broken yet, it's not a clear path. And if it's not a clear path, that advantage isn't present. And if that advantage isn't present, it could never be a high probability trend trade. It could never work its way into what we consider something that typically wins 70 to 80% of the time. It changes the dynamic, but it's still an outstanding trade if you choose not to forfeit momentum, if you choose not to forfeit the perfect entry area, and we'll talk about those entries. So two parts to termination conditions, guys. Price reaches, where are the triggers? Price reached one-to-ones. None of my triggers broke on the S&P for the moment. We are into a termination condition. Look at the reaction on the smaller, faster chart. Look at how the market spiked down right off of that. On crude oil, absolutely none of your triggers were able to make it through this area of support. They tried to, but they didn't. Look at the reaction on the smaller, faster chart at the key areas. It's like a dance. And all of these bars are untradeable. We're into resistance, we're into support. Rule number two keeps you from getting caught in a range, guys. So that's your second advantage. The advantage of a clear path. Is everybody comfortable with that? When price reaches an area, no triggers through, let's just sit on our hands and wait because we're not in control. We're going to see what the market wants to do. I do want to talk about one more termination condition. Um, doesn't hurt my feelings if you guys don't react. I just want you to know that I understand all this stuff. If you don't, it's a great opportunity for you to raise your hand. There's one more termination condition, guys, and this one happens on a small chart. It's the only one that happens on a small chart. And it's three divergences in the same price range. Three losses of momentum, evidenced by cyan lines printing from a low, magenta lines printing from a high. When you have three divergences in the same price range, it may reverse the market. Notice that I use the word may or likely. We never speak in absolutes. It may reverse the market. Um, Three divergences in the same price range becomes more powerful when your small triggers work their way inside of the large triggers. When you get those anything can happen triggers on your smaller, faster chart, and it becomes more powerful still when that third divergence pivot is higher than the previous from a low or lower than the previous from a high. And guys, you're going to be able to see this. You're going to recognize on a small chart these three divergences, and what it's really telling you is that on your large chart, change is happening. Because remember, the large chart, what happens in one bar happens in 15 to 30 on that smaller, faster chart. So even if the large chart says up and the large chart has a clear path, three divergences in this price range gives you the heads up that they may be pushing down. Or even though the path is clear and everything's working down, three divergences in the same location here gives you the awareness, the understanding that that market may be pushing up. So guys, that's termination conditions. That's rule number two. That's giving you the advantage of a clear path. And once we have those two together, well, now we have to let the small crowd into the mix, guys. Once we have odds favorable momentum, right? The large crowd says that we're going up and we're going up strong. Once we have a clear path, the large crowd hasn't reached any place where they may react, where they may take profits, where they may enter trades. We're going to let the small crowd force a pullback. We're going to let the small crowd fight just hard enough to give us a retracement. And a retracement is a tiny movement in price counter to the underlying trend. This small crowd gets Nexgen users to their absolute best of the best spot. This is where rule number three comes in. Rule number three says on a smaller chart, you're going to use a limit order, meaning that you're literally going to wait for the market to come back to you. And you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. So you're going to let the small crowd push. You're going to identify exactly where the market is likely to continue, and you're going to wait for it with a limit order. And that limit order is going to be at an area. All high probability trend trades happen from an area, guys. It can be Fibonacci support or resistance. It can be yellow one-to-ones. It can be a midband. But the key to the success is that those areas reside inside of what we call favorable large triggers. And favorable large triggers in an uptrend, which is what this picture is, mean that your large triggers, these are native to the 5-1 chart, to your smaller chart, to your entry chart, to your slower moving average. They work in this symbiotic relationship with your synthetic triggers, the step-looking triggers. And those are nothing more than the large triggers from your large chart. So what a little bit of study in John Novak's brilliance has done is he's realized that when they're one on top of the other, when they're creating this look like two snakes riding piggyback, it's going to provide Nexgen users the absolute smallest window of opportunity, the smallest point where the market is likely to continue. You're going to look for areas nestled within those triggers and literally wait for the market to come back with a limit order. So favorable large triggers means that they're one on top of the other. Um, you may have trades without favorable large triggers, but it creates a lot of indecision and your potential advantage goes down. So we're going to let the small chart force a pullback. We're going to go to the entry rules. And when all the rules are met on the large chart, when your triggers are their strongest, when there's nothing in the way, the trend is up, This should be the look on your smaller chart, guys. Your large and synthetic are strong, they're wide, they're angled in the direction of the trade. They're one on top of the other. The momentum is outstanding, and you're just starting to look for your entry. You've made the decision that it's time to look for an entry because I have the advantages on the large chart. You're going to focus your attention on those favorable large triggers, and you're going to look for the areas that may fall within them. Fibs, midband, yellow, one-to-ones. At this point, there's nothing to do. We're exercising our patience. We know that it may be setting up, but we need something to happen, guys. We need that small crowd to force a pullback. And that begins with a reversal bar on your smaller, faster chart. When that reversal bar prints, it lets you know that the fight is on. Because of the momentum on the large chart, because of the clear path on the large chart, because the large crowd wants everything to go up, we don't expect this fight to last too terribly long. Um, so we identify our areas that are falling inside of favorable large triggers. Fibs, midbands, yellow, one-to-ones. This becomes your window of opportunity from the highest point of support. And I'll do a picture that's kind of showing the whole thing. The reversal bar prints. You identify your favorable large triggers outlined by the red box, and then you go from your highest point of support, this happens to be a midband, to your lowest point of support, these yellow one-to-ones. Guys, this becomes the area where the market is most likely to continue. This is your best of the best spot. You're going to activate a limit order right at the top of that window because of the momentum on the large chart, because of the clear path. We don't expect that small chart to be able to push too terribly far. This becomes your entry, guys. This is your highest probability trend trade entry. In a short trade, it's the exact same thing going the other direction. You wait for a reversal bar. At the time of the reversal bar, you identify your favorable large triggers, and you can draw a box if you want from the top of the large triggers to the bottom of the large triggers. But this isn't the area where the market is most likely to continue. The area where it's most likely to continue are the areas within the large triggers. And in this case, it's nothing more than a midband. One line, one spot where the market is most likely to continue. You're going to activate your limit order a couple ticks below it, and that becomes the spot for the bounce, for the continuation with all those advantages, guys. So your first 20 days with Nexgen, honest to goodness, should be spent working on entries, putting the three advantages together, and making sure that you can get in at the best of the best spot. Making sure that you can get in where your risk is the least, where your profit potential is the most. Making sure that you make yourself comfortable with buying the market as it's coming down to you. And we're going to go through the whole process real quick, guys. Large chart has odds favorable momentum to the upside. Rule number one. Large chart has absolutely nothing in the way. Rule number two. On the small chart, you will wait for a reversal bar. At the time of the reversal bar, you'll identify from your highest point of the triggers to the lowest point of the triggers, which are overlapping one on top of the other, and you will say to yourself, I need to look for the areas within. I need to look from my highest point of support to my lowest point of support inside of favorable large triggers. This becomes the window where the market is most likely to continue. This is your best of the best, guys. Your first 20 days with me, your first 20 days with Nexgen should be focused on identifying this window and putting a limit order right at the top. This is your high probability trend trade. Can you guys give me a Y in the room if you're with me so far? Reversal bar, identify the triggers, the areas within. Limit order is waiting right there, guys. And then the market comes down and it doesn't hit your limit order and it starts back up, guys. That's not your money. If it doesn't hit the best of the best spot, it's simply not your money. But more often than not, it does, and it comes and it hits that limit order, and you're now in a long trade. You're in a long position with the advantage of momentum, the advantage of a clear path, as well as the advantage of entering the market where it's most likely to continue. And then the market pushes against you all the way to that lowest point of support. A lot of you are going to jump ship. A lot of you are going to run tight stops and say, oh my gosh, I don't ever want to see the market go against me. You need to use that simulator time, that first 30 days to break that habit, because you are still in the window and life is still good and everything is still doing exactly what it's supposed to do. Sometimes it won't. Sometimes it'll push right beyond that window. And that's where you are going to have a protective stop. You are going to have something right there that says if the market goes beyond the point where it's most likely to continue, I no longer want to be in this trade. And the cool thing is with a little study and a little bit of repetition, you're okay with these losers because you understand that anything at all in life that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. It's just a cost of doing business. Nobody likes paying rent, but we pay rent, right? Nobody loves paying their mortgage note, but we do. Nobody wants to pay for advertising, but we have to, guys. It's a cost of doing business. And small losses honestly are a very normal part of a positive equity curve. Gary showed us his P&L from yesterday, up nearly $2,000, over $500 in losses on his way to get there. It happens. Be okay with it. Trust the methodology. Get your stop where the market shouldn't go. And I'm telling you right now, there's going to be some of you that don't want to trade with stops. That's your own business. Um, it's a fool's game when you do that. There's not a successful trader in the world that just hopes. The cool thing is, guys, is once you get good at this entry, once you begin to understand where the market is likely to continue, once you understand where it shouldn't go so that you can place a stop, you start taking these great entries. And they work 70 to 80% of the time. And once that market starts to go in the direction of the trend with all the momentum, you can actually manage your risk even further. You can reduce it below that reversal bar in the direction of the trend. And guys, this is it. This is your first 20 days with me. Be able to identify the window. Get to the point to where you can identify where the market is likely to continue because great entries create very manageable trades. Great entries create very low risk. And even better, waiting for that pullback to the best of the best area increases your profit potential. It gets you closer and closer to that or further from that target, right? If I jump in up here, my stop is still down here and my distance to my target goes to there. If I jump in on this little one here, I've reduced my profit potential and I've increased my risk. And if I jump in after an up bar, this is a great way if you're too nervous. If you're not comfortable buying with the markets going down, let it give you an up bar because it establishes your risk and it gets you in the direction of the trade. You'll sacrifice just a little bit of profit, but it'll give you that little bit of mentality where you're like, yes, okay, everything's doing exactly what it's supposed to do. So, guys, that's your high probability trend trade. Um, I'm going to show you the picture. We don't trade tails, right? We talked about the tails on the large chart. We don't trade those. What we're doing, let me find my picture real quick, is we are trading pullbacks on a smaller, faster chart. Everything that happens in this one bar, the top of this bar is the beginning of the pullback. The bottom of this bar, the tail, the wick, is the pullback to support inside of favorable large triggers. So once the large chart says odds favorable, once the large chart says the path is clear, we switch to the small chart and we look for the window of opportunity. Guys, I wanted to share this picture with you because this is one of the easiest ways. If you get to the end of the day and you say to yourself, man, there were no trades today, you can scroll back and you can test. There's a big sell-off in crude, huh? So let's go back and look. How about this one right here, the one that D-Rock took for us? The smalls are above the large. The large are wide. They're angled up. Both small and large triggers are above resistance. It's now behaving as support. And there's one of those tails. If I circle this tail on my large chart, all I'm doing is doing some historical study. All of my rules are met on the large chart, so I scroll back to my smaller, faster chart, and it pulls back perfectly to an area of support inside of favorable large triggers. Guys, this is your highest probability trend trade. This is your best of the best. This is the one with just a little bit of practice and patience you can reach. And then D-Rock, what did you say you made on this trade? 380? Two contracts, $190 each, over the course of 7 or 8 minutes. Absolutely outstanding, guys. And you can scroll back and you can just continue to look for these all day long. Where are my triggers? Where's my momentum? What did it say? It said pull back to support inside of favorable large triggers, right? Over and over, guys. All you have to do is get comfortable to do it. Strong triggers haven't reached support. There's a tail. Let's see if it made it back and gave anyone an entry. A little bit below the area of resistance inside of favorable large triggers. Guys, this is one of those ones that you may let go. So that's it. Are there any questions about high probability trend trades? Are there any questions about momentum? Any questions about termination conditions? Any questions about entries? Price reaches support. No triggers break. Nothing to do, guys. You're professional waiters. Nope. Awesome. So let me share the stuff that I share every day, every week. Guys, I'm going to drop in the chat room right now. There's my spreadsheet. Go through this weekend. Study all those pictures of entries, guys. Burn it to memory. Here's a checklist. Whoops, my monitors got jacked up on the update. Here we go. Here's a checklist that reminds you of the advantages that you need to enter the high probability trend trade. This gives you something to write on your chart each and every time you take a picture when you take the trade, guys. This is how you hold yourself accountable to following rules. Print this out, put it on your room, and go through it each and every time. If you have a question about good tops and bottoms, odds favorable momentum, termination conditions, guys, it's your job to raise your hand and ask me. I can't tell. Billy Billions has had the same cool look on his face for the last 20 minutes, right? I don't know if he's confused or not because of his avatar. Ron C's been on the same motorcycle, and D-Rock is still with that lovely young lady. Guys, I can't see if you're confused. Raise your hand. This checklist has never been followed to the letter and had anybody do worse than 70% winners. Just throwing that out there. And then here's the same checklist with the visuals of what it means to have your rules met. What's a strong bottom? What's odds favorable momentum? How do I define a termination condition? Where is my window of opportunity? Guys, all these questions are answered visually right here. You should look at this every morning before you get ready to trade. And then finally, he who has no written plan has no plan, guys. And not having a plan as a day trader is just, it's financial suicide. You need a set of rules to get you in. You need a set of conditions to get you out. And you need something that has been proven through study, through repetition, to create a statistical advantage. Um, and that's what this is here, guys. This is what I'm giving you right here. Disclaimer, this plan is not the end of the road. This plan is a stepping stone in your learning journey. It's designed to optimize your chances of success with the high probability trend trade and that 50-50 trade, that medium probability trade that we talked about with the areas that had the potential to break it as a new user. Through simulation, through study, through class feedback, continuous practice, guys, you're going to create your own plan that's tailored to your own goals and your own needs. And you're going to do that through your chart reading. It's going to be based on your experience reading the indicators, guys. This is a solid plan. This is a plan that I've seen a lot of you in the room find success with. Hit that 70-80% winners. Um, this is also a plan that I watch a lot of people jump ship from and find themselves struggling. So it's up to you to make the decision. But your simple plan for consistency revolves around never fighting the large chart triggers, never fighting the large chart direction. Um, Sorry, my brother just sent me a note. For those of you that want to go see him trade, here's his little reminder. Sorry, that made me laugh. Um, Guys, everything that you do is about um, entries. Everything that you do is about getting in at the right spot. Everything that you do for your first 20 days is designed to get you into the market in the best of the best spot with the best chance of winning. And never fighting the large chart of the direction triggers, guys. That's a first step in doing it. That'll eliminate 70 to 80% of your problems. So just define your entry, 20 days, commit to an entry. Don't worry about winning or losing. Don't worry about coulda, shoulda, woulda. Just focus on getting into the market at the right spot, guys, because when you do, those great entries create very manageable trades. They create very minimal risk, and they really increase your ability to make profits. So there's your checklist. That's what's getting you in. Take a lot of pictures, guys. Take 20 pictures of your favorite longs, take 20 pictures of your favorite shorts, and then add another 500 pictures to the pile. Once you're in, you have to do something with it, right? You have to manage your position. This is the second biggest piece of the puzzle. Getting in is going to be easy for you guys after a week or two. Sorting through management takes a little bit longer. But using a very mechanical, very pragmatic, very emotionless management plan, the same way you used a very mechanical plan for entry, tends to be the best approach for new users. And it all revolves around your ability to get in at the best of the best spot. So in this particular picture, the entry comes just below resistance inside of favorable large triggers. And the initial stop goes outside of that window where the market shouldn't go. It's typically 12 to 14 ticks in a futures trade. With this great entry, with your stop loss in place, there's nothing for new users to do anymore. You're either going to be stopped out, it's going to be a cost of doing business, or the market is going to smile on you and it's going to provide you a reversal bar in the direction of the trade. And if it gives you this reversal bar, you're going to reduce your risk. You're going to put your new stop 2 ticks above that reversal bar, 2 ticks below if the market's going up. And then once again, you're just going to let yourself be okay with you're powerless now. There's nothing to do. It's either going to hit your stop, you're going to take a small loss. It's a totally normal part of a positive equity curve, or it's going to hit your first target. And your first target's only $100. But at $100, it's guaranteed money. At $100, you get to hear target hit. At $100, you feel successful. You have confidence from that success, guys. And it feels good to make $100. It really does. And then you're going to move your stop to break even. So not only did you get paid, you've got absolutely nothing at risk. Um, and when you have nothing at risk, when you've already got money in the bank, when the dopamine is flowing, it makes it easier for you to hold for the second target. And you're not going to move your stop again. It's either going to hit the second target or it's going to hit your stop. And just a little word to the wise here. Um, it's going to hit your break-even stop quite a bit in the beginning. And you'll learn to manage through repetition how to place your stops properly. But that zero risk and that 100 paid makes it easier for you to sit on your hands and let the large chart lead the way. Let that odds favorable momentum lead the way. Let the idea that nothing in the way creates an advantage. And if it hits your second target, guys, it's a $300 trade. And it's a very simple $300 trade. And it's usually a very stressless $300 trade. And this is where I always remind people, it's not about catching every trade. Because if you catch a $300 trade once a day, every day, those are $1,500 weeks, guys, and those are $6,000 months, and those are $72,000 years. Based off of one plan, hitting simple targets, right? What happens if you get break even 3 times a day? That's it. I made $100 in break even 3 times today. Guys, it's the same 72 grand. Trading isn't about home runs. Trading is about getting paid. Trading is about having a statistical advantage and taking what the market gives you rather than trying to impose your will on the market. And when the market gives you odds favorable momentum and the market gives you a clear path and the market blesses you with a pullback to an area inside of favorable large triggers, guys, you are on the best of the best. This is your trade. This is what you're looking for each and every day. D-Rock showed us a beautiful example of it. And what kind of made me proud is D-Rock and I had the exact same entry. We had the same first target. I took $300. Actually, I took 310 on this trade somehow. Um, but this was $300 easily, stress-free. The large chart led the way. And it's pretty awesome When I take a trade in my own personal trading that fits the plan, and then right behind me, D-Rock shows up, and it looks exactly the same. The exact same advantages, the exact same momentum, the exact same clear path. And then D-Rock said, you know what? I believe in the large chart. I'm going to hold for the second target. And absolutely, D-Rock made more money than I did. Nice job. That, for me, is the proudest moment of teaching this class, is when I see you guys take what we teach and turn it into profits. So outstanding job on that one. Guys, if you focus on nothing more than the absolute best, your chances of finding success go up pretty well. Remember that you need to post in class. You need to show me what you're doing. Win, lose, or draw, guys. You just need to know what you're doing right or wrong. I'm really pretty good at reading indicators. And I'm pretty good at teaching people to read indicators. And I'm going to encourage you to keep it simple, to not make it difficult, to not add things that don't need to be there, so that you can just continually find success. So, guys, that's the first hour. Welcome to the first hour. I'm going to remind you, John Novak's trading live. I'm assuming that's why there's nobody in my class today, other than a few special favorites. But John Novak is going to start trading the S&P live in just a couple minutes. Red news in one, high impact news coming in one. I'm going to take a couple minutes. There's your S&P. We'll see if it breaks it out. Guys, if you have questions, post them in the room. If you have pictures, post them in the room. If you want to jump over and watch John Novak trade the S&P live, it won't hurt my feelings at all. Whoops. But it looks like hopefully news is going to break them out of this little range that they were in. There it goes. There's odds favorable. There's a clear path. There's areas of resistance inside of favorable large triggers, and sometimes it reaches the target before it gets you. But even during news, there you go. Look at the push. Guys, I'll be back in 5 minutes. Stretch your legs, breathe through your eyelids, do whatever you need to do, and I will come back and we'll look at your pictures that you've posted. We'll talk about whatever you want to talk about. Mic silence for just a minute. All right, guys, let's get into the second hour. It's such a small class today. That's all right. Excuse me. It'll be fun to see if we can call what my brother is doing in the other room too. Right now, he's telling you that in the S&P, you're coming off of resistance. The trend is up, but you don't have odds favorable momentum. You can't if the large triggers are down. So everyone's in a holding pattern right now. They're just waiting to see what happens. Until the market gives them something, there's just nothing to do. And I think he's only watching the S&P, guys. If we look at crude oil, notice that price reached Fibonacci resistance and absolutely no trigger lines broke through. Nothing to do. Thank goodness. Rule number 2 keeps Nexgen users safe. So um, I'm going to scroll up to the top and we are going to look at what you guys posted. Gary got us going today. And Gary, this is the NASDAQ. You had odds favorable momentum. It pulls back to support. Strong market flow signal. There's no strong market flow signals. There's only market flow signals. But you had advantage of momentum. You had that path that was likely to clear. You had everything that you needed to take that trade up to Fibonacci resistance. Nice job. There's a pullback to support inside of favorable large triggers, risking $190. Not so bad. And that one worked out just fine. John Novak, same thing, right? Everything says up, pull back to support inside of favorable large triggers. His next picture is him making money. And there's another trade right in the middle, which is pretty cool. And then he posted one more. And there it goes, guys. Odds favorable. Everything says up from a termination. Amazing trading. Simple, simple, simple. And then one more. There's D-Rocks. We've been using that one all morning to talk about how easy it can be if you allow it to be. Great stuff. And the market's not doing a lot today, guys. It's like they're going on vacation. Ron C. Whoa, Ron. Ron is fighting direction. Ron is fighting momentum. Ron says large triggers don't follow. Gap sniper 275. Ron, a little misunderstanding of the gap theory here. Those large triggers need to be above that reversal bar marker, Ron. Otherwise, you're just trading against everything coming off of a termination. That's a tough look. Normally I can say, yeah, Ron, nice chart read. I think this one thanks for the heartburn. It's been a while. You are a rebel like that. Perfect execution. It's the lack of greed that makes it work. It's the willingness to get out of the trade rather than hope that it works. And then Miss Debbie, odds favorable, everything says up, beautiful pullback to support. Is that the same one that John took this morning? Hope costs way too much. That's a good looking trade there. Daryl, did you took the crude trade this morning? Or you took John Novak's S&P trade? Both of them they're identical, just different markets, right? The ES. And then Debbie, this is beautiful. So you took this one. That was Debbie's version of it. Pull back to support inside. What a great way to start the day. And that's, trust is a big deal. Learning to trust what the indicators are telling you is such a big thing of what we're doing. This is so funny. I have never had 13 people in this classroom. If it were a popularity contest, we know exactly which Novak brother is the most popular. That's so funny. It's just rinse and repeat, guys. What do you want to talk about? This may be a 2-hour class today. That termination won, didn't it? Isn't that cool? Even with odds favorable momentum, none of you went long right here. None of you said, I sure hope it breaks, right? If you did, you should be showing me a picture of your loss. 13 on the 13th. Yeah. All of my friends are tattooing people today. All my friends are busy, busy, busy in tattoo shops. This is one of the greatest days of the year. This is like Christmas for tattooers. And I am traveling the road without a shop to tattoo in. That's okay. From support to resistance to support. And now we're saying to ourselves, if the small triggers start breaking through, maybe I'll look for an opportunity. If the market rolls, I'll look for an opportunity. But the reality is, guys, is there's a whole lot of nothing going on right now. John Novak said that with this resistance and all the triggers down, he probably went short into it. Doesn't fit our rules. Who's peeping in on the other room? Did he go short there? Looks like a trade he would take. Um, I'm hanging out with a bunch of chart readers. I love that though. That's all we're doing, guys. That's all we can do is read charts. All we can do is hang out and wait for advantages. Um, I know it's a quiet class today. I know that the siren song of John Novak potentially trading in the other room. Guys, go watch him if you want to. I promise it won't hurt my feelings. But you guys that are sticking around, Anthony, Freddie, Sonny, Ron, Walter, T45, Donna, Joel, D Soap, D Rock, Craig, Daryl, and Chris L. Is there something that you want to talk about? I'm not trying to put you on the spot, but maybe there's a concept you're curious about. Guys, don't be shy. Give me something to do. Termination, determination, and both of them created a bounce. Decisions were made. Same rules, Joel. Exact same rules. Odds favorable, clear path. That's it. There's no secrets on the NASDAQ, guys. It's just faster. It's a pain in the ass. It overruns areas. It does what it's supposed to do enough to keep you sucked in, and then it breaks the rules enough. It overruns a lot, Joel. It overruns a lot. And you know what's amazing is there's people that have been with Nexgen for 15, 20 years, and they've been trading the S&P. You watch four markets, Daryl? You've got a better attention span than I do. What happens if you're watching one and then you go to the other and you just missed a setup? Do you ever find yourself trying to make it up? Oh, you have them all up at once? Oh my gosh, that just made my eye twitch. I've got nothing but respect for you guys that have that much attention. I can't do it. I can't do it. I have to look at one chart at a time. Um, that's just me though, right? Everybody's brain is different. I can't play drums either because I can't make my hands and feet act independently of one another. So we all have our own special skills, right? I like it. I think it's easier. And Daryl, correct me if I'm wrong. If all you're looking for initially are the rules to be met on the large chart, then you're really only looking at four charts, not four markets, right? World's worst multitasker. But does that make sense? If you're only looking for odds favorable momentum on one chart, you're really only looking at four charts, not four markets. And then once the large chart from that market tells you it's time to look, then you're looking. Yeah. So I could see how that could be done. That's a great segue, though, to we did this little exercise. I don't remember when we did this, but it was a lot of fun. It was the too many mind. Um, it- Let me see if I can find it. I hope I didn't lose it. We did a little deal, and it was too many mind. Do you guys remember that? Here it is. when you're talking about starting to day trade. So Anthony, Freddie, my new guys, Chris, this is for you guys a lot, and that makes sense. You know what I do, Daryl? I have a sketch pad in front of me most times, and I just draw. When my rules aren't met, I draw or I play video poker. Anything other than try to fabricate. So guys, we all start with a high probability trend trade, right? And there's three rules on two charts. And that means that we have five things to think about. Every time we open our workspace and we look at it, I have to think about direction, I have to think about momentum, termination conditions, and whether or not I have an entry on two charts. So that's not so hard. Five things is pretty easy. Most of us can do that. And then I add in the 50-50 trade, one of those medium probability trades, and that's four rules on three charts. So that's seven things to think about, right? So now I have two trades, and I'm looking at two charts, and I've got seven total rules. I've got 12 things to think about between the two. So every time I look at the market, now I'm asking myself, is it a 50-50? Is it a high probability? Let me go through the rules for both, right? And this is an oversimplification. And then I add a momentum trade, and that's two charts and four rules, right? So now there's 18 things to think about. And then, Daryl, this is what kind of sparked it. And if I'm watching three markets, I've got 54 things on my brain every time I'm looking at them. And then you add an HVA, and it's 25 or 75 things on three different markets. Guys, it's too many minds for the average trader. It's too much to think about for the average trader. That's okay, Chris. So what I find is that until you're really good at this, until this becomes second nature, there's no need to add this, guys. You're in it for life, right? And then you add this one, and until both of these happen in a fraction of a second, this is how quickly your chart reads will happen. Don't have odds favorable. Done. Let's go to the other one. I do have odds favorable and a clear path, and if with both of those, I need a pullback to resistance inside of favorable large triggers. That's how quickly I find a high probability trend trade. That's how quickly you'll find a high probability trend trade. And then it's going to keep going down without you, and you're going to be like, I've got to readjust, right? Because I still have odds favorable momentum, and I still have a clear path. And I only have two divergences. If I get a third divergence, well, that could stop the trend. I need to be prepared to hit that big red X button. But guys, that's how quickly your chart reads can happen. Chris L., everything says down. It didn't make your entry point. So you entered when they headed the other direction. Not the greatest momentum yet, but you have a clear path. You have odds favorable, right? Chris, I hope you had an entry waiting up here on the high probability trend trade. It didn't hit it. At that point, you can pop in on a reversal bar, right? You sold it for a couple more ticks, but all the advantages were still in place. You just have a little extra risk, right? That's the only difference. You got in late, but you knew exactly where your stop had to go. You had odds favorable. You had a clear path. This is just heads up trading. This is saying, you know what? Nothing has changed, and it's going without me. I'm going to catch a piece of that. I like it. I think it's a good shot. Then D-Rock, there was a close high probability trend trade, but the area was slightly above the triggers as it got close to entry, and the only negative you saw, so you didn't take it. Also was only one tick away from a fib, so technically had not hit support either. What do I think about it? It sounds like you already read it, didn't you? Odds favorable, everything said down. One tick. Oh, one tick. So let me go to my one tick picture. And guys, this is where you have to make a decision. This is where I can't make these decisions for you. So let's talk about it. When the T3 Fibs Pro Trader analyzed data setup for the last 10 days, there's literally thousands of calculations, D-Rock. Everybody else. I mean, it is thousands. Every line that you see in this picture is a calculation. Um, and it's 10 time frames of data, right? It's every swing in the market. Guys, it's thousands upon thousands. Your software sorts it, weighs it, all that good stuff. And it comes up with, from all of that, these pretty lines, these blue lines, these red lines. And these lines are very much areas. So when you come, and this is a good example here, D-Rock, 3 ticks above the area, 2 ticks below the area, 3 ticks above the area, a tick or two above. They're very much areas, right? Um, and you did have odds favorable. And you were coming from a great top. So here's kind of one of the things that I do is when I'm looking at, okay, I'm a tick off and I'm trying to make a decision on whether or not I want to take that trade. The first thing I'm looking at is, do I have strong triggers? I do, without a doubt. But then D-Rock, do you see how the problems start up? Divergence prints. So the buyers stole momentum from the sellers, 1 tick off of that fib. And then all of my trigger lines, they really are, they're below that mid band. And that's not my best look, right? I know that I want it nestled inside. Um, so that alone, I would probably do the same thing you did. I would probably say, you know what, this isn't my trade. If there were no divergence and that was nestled inside, I might take it. If you did take it, it certainly gave you a management opportunity. You probably made $100 and then got out break even. But they're areas. They're very much areas. So a tick or two above, I'm forced to go into over analyzing and making sure that I'm not giving anything away just in case they decided to stop short. But I love this picture because it reminds me that they're just areas. The ones that aren't just areas. This divergence low. So this divergence low is the exact 100% to the tick um, area where the buyers stole from the sellers. Notice how this is 75, right? This is 75. If you go up a little bit, this one is '07 flat. Look at the fibs when you go to the price bars on them. 90.49, right? 90.15. Those aren't real ticks. This reminds you that they're areas. So fibs are areas. One-to-ones are 100% retracements. They're not areas. They're based off one calculation. Divergence highs and lows are based off of one specific price. So when I see price reach a one-to-one to the tick, that's a big deal for me. Or if it stops 2 ticks short, I know that it was a 100% in concrete, um, measurement. Same thing with this divergence low. If it hits me to the tick, I know that that price has been reached. If it misses it, I know that it hasn't. Does that make sense? That's a great lesson on almost getting to the area because they are areas. I hope that was helpful. Whoops. And then sometimes we get caught in between areas, between resistance and support. Sometimes you got to sit around and do nothing because there's nothing to do. Great question, D-Rock. Thank you. And then the too many mind, guys, that's in the vein of keeping it simple. So now we're back up to resistance and we're asking ourselves, where are the trigger lines? Are they going to break? Because price doesn't determine a broken area, trigger lines do. Look how it's rocketing up, crude oil. The smalls and the large are both wide, they're angled, but they're not through that 86 area. Let's see if we get another little push up. Let's get some trigger lines through it. Let's get some momentum through it. Let's gear ourselves up to get excited for maybe a potential long if it all comes together. Now the smalls are through, but the large are not. They're picking up momentum. Even better. Holy smokes. Somebody give me a pullback to support inside of favorable large triggers. And we're going to hope it happens before they hit that red fib. Does that make sense? That's how quick it happens, guys. And if they hit Fibonacci resistance, well, then I have to cancel my order. There we go. Whoop. Look at that. It broke again. Odds favorable. The smalls are through. The large are not. That's a big window of opportunity, though. That's 15 ticks without a clear path. Is anyone else getting the same chart read that I am? It's the D-Rock show today. I like it. It's okay, guys. It's Friday. It's the end of the week. Oh, look at that. That exact line. Pivot stop out. How's that for a termination condition? Chris L says he wants me to get a paycheck. Thanks, Chris. Don't be mad at me. This is a non-normal rules-based trade based on a good bottom. Don't have it. Returning to large mid-band. Price differential. Exiting when Renko bars hit the mid-band. Chris, I'm not going to lie. I don't have any idea what you just told me there. Because it's not a good bottom, because it's not a termination that creates a full reversal. There's nothing there. This is a pivot from the middle of nowhere, right? So it can't be a good bottom. You do have smalls above the large at the time of the entry, and everything is below resistance except price. So in the moment, resistance is very much a termination condition in a strong trending market with everything below. Your small chart started to roll, but your synthetics are down. Your large are starting to roll up, and you put all your money on that holding to the upside. And it worked, didn't it? I'm not mad at you. I never get mad at you. But great googly moogly. You're fighting a lot. Can I show you something, Chris? So this line right here is this line right here. Cool? You with me on that? You're absolutely right. So this line on your large chart is this line on your small chart. This is your problem spot. Wouldn't you agree? I need that to break. I need this to break. Does that make sense? Cool. So here's my 2 cents on it, right? Let price break it on your smaller, faster chart, right? At least give yourself a fighting chance. And then when it pulls back right to it, dude, that becomes the exact same trade with that in-the-moment momentum, expecting the mid-band. But now you've got something solid for that market to bounce off of. And it's only a 5 or 6 bar difference. But do you see how letting it break and entering on the pullback keeps your risk minimal? Rather than jumping in at the top of the bar when this resistance might very well hold. I don't disagree with the thinking on it at all. Not even a little bit. You just rode the train up to the mid-band. From divergence, from the middle of nowhere, and then from this area, you knew to not hold and hope, right? Okay. Well, your large chart had large triggers that were down, and every one of them was below resistance. How many times, Chris? So this is what I asked myself. How many times is that going to be a winner for me, or how many times is it just going to kick the ever-loving crap out of me? That's what you need to determine. Because if you get lucky, you're going to expect to always get lucky. And I can tell you that luck runs out a lot. Especially it runs out when you're $8 from your stop loss limit. And you take that one trade that worked for you on simulator and it just whips your butt. Has to be a very large gap. So why would you expect it to go back to the midband? Is it because of the gap theory? Why did you pick the midband and not Fibonacci? And this is me really just trying to learn something, I think, at this point. Um, and again, guys, I never knock your trades. Sometimes I just want to understand them because they may be brilliant. Okay, so you have a pattern, and when there's a huge gap, cool. So one thing that helps this gap, Chris, is that divergence. Divergence from the middle of nowhere loves to make it back to the midband. You can see it in the same picture over here, but you don't know divergence is true until maybe just a little bit after your entry. So maybe letting divergence confirm from a bad bottom, maybe something that you could add onto that pattern if you wanted to look at it. Yeah. And if there's no divergence, well then the buyers didn't pull any momentum out of it, and it may be less likely to hit that midband. Let's see if we can find some patterns. We got time, right? Um, 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 um. Divergence, divergence, divergence. I want to find one with no divergence. No divergence, and that one actually rails up a little bit. But again, into resistance, look at the reaction. No divergence, it doesn't push too high and comes back down. Yeah, I don't know, Chris. I think it's cool study. And I dig you would leave that on the midband, last one. I dig that you're doing this research, guys, because this is how you create plans. This is how you build on plans. And I even made this one fill in the blanks, Chris, if you want it. As you do this one even more, write very detailed. What's it going to take to get you in, and find a bunch of pictures of it. And that way it becomes repeatable each and every day. So there's kind of your fill in the blank for developing a plan, and it sounds like that's what you're doing. I love seeing that. Means you're a chart reader. Almost odds favorable momentum, completely below large yet. Clear path, good top, 50-50 from divergence. And see how it was no divergence on that? I love it, Chris. D-Rock, do you see how when this super clear path, everything going down, no divergence? For me, that's a good one. Strong momentum, no divergence, pulling back. That helps me win the bar fight. Because you're like almost odds favorable momentum, but isn't it accelerating? Isn't it accelerating the direction that we want it to go? And this is kind of a cool thing, guys. And I stumbled on this in class one day, D-Rock. When the market's moving down and those trigger lines are accelerating, whoops, they're literally moving from right to left, away from the trigger lines, from right to left, creating. So if they're moving from left to right, you know that they're decelerating. If they're moving from right to left, as they are here, you know that they're accelerating. So you may be catching the very beginning of that move, the very beginning of that momentum. And the same thing on um, uptrends. See how they're accelerating away they're going from right to left. They're going the right direction to create that momentum, as opposed to them moving from left to right, which has them pulling back in. And I think that that's one of those things. And John Novak used to talk about the bar fight. And not everybody's been in a bar fight, and that's not a bad thing. But the idea, the premise for that is, ooh, this is kind of a big picture. Here we go. That's okay. A little black and white yields huge dividends in this industry, D-Rock. Those of us that are super artsy fartsy, we get creative on it. Um, but this one worked for me. So let's look at it real quick. Midband was acting as a termination. All your triggers are down. The smalls are accelerating. We haven't reached the area yet. Um, no divergence here. Tiny little window of opportunity. Room to the target. And then the one thing that's against it is that we're not quite odds favorable momentum, right? Not quite. And D-Rock, I respect and support your desire to not take this trade 100% because your rules aren't met. It's not the best of the best. But if we go into what John used to call the bar fight scenario, right? You have, we'll make them angry. I don't have an angry color. You have the drunk quarterback of the football team. You got three of his rugby buddies that are liquored up to no end. You've got that guy that's been studying martial arts for 8 years. You've got this guy that's a professional boxer. And you've got this dude that he's just got a nasty disposition and doesn't mind throwing hands. And then against all of those things in favor, the captain of the chess club is like, guys, we're about to drop each and every one of you. Put your dukes up, right? Which side of the bar room do you want to be on? And this goes all back to advantages, right? If I'm looking at 10 advantages against one disadvantage, is it worth it to me? And D-Rock, you're the only one that can answer the question. Are you willing to lose $100 with all those things in favor of the trade? And if you're not, that's totally cool. There's a lot of times where even though I think I have overwhelming, it's far enough outside of my rules that I won't take it. Even though my chart reading says this is what the market's most likely to do because it's outside of my rules, I don't take it. Because I know my own personality that once I start breaking my rules, I full blown break my rules. Yeah. And you're right now, aren't you finding pretty good success keeping it simple and focused in black and white? 75%. So why on earth would you ditch what's working, right? That's that, if you were here yesterday, that's that 30-day mentality. Why on earth would you ditch what's working? Just because there's more opportunities doesn't mean that you need them, right? Just because you could have made an extra, taken an extra trade and made an extra $300, couldn't you have just doubled down on your perfect trade and just doubled contracts and made that same $300? And I think that's the mentality that a lot of us lose sometimes is we forget that if I can take this trade right here on a two lot and make $300 easily, can I turn that two lot into a five lot and turn it into $1,500 with the same odds favorable momentum, with the same clear path, with the same perfect entry, with the same low risk, just with more contracts? Rather than saying, well, I have to take this trade over here that's a maybe, and I have to fight against it over here that's a it could, but I'm not sure. Or I can say this thing is so kick-ass, I'm just going to add contracts. I'm actually a little disappointed that I didn't take that one on a bigger set of contracts, but it's making a picture for class. Guys, termination conditions both ways right now on the S&P. Do you see it? Pivot stop out above us, pivot stop out below us. Which one's going to win? Buyers or sellers? Does anybody know for sure? I don't. All right, we reached the problem area. I'm just going to shut up, guys. You guys let me know what you want to talk about. I'm going to go mic silence. There you go, Chris. 8 or 7? Are you trading on 8? I didn't. You are trading on 8. All right. So let's go to the instructions. I like doing this. I love teaching you guys to fish, but I like giving you fish even more. Software user guide. So Chris, it's even easier because John Novak gave you about 50 options. Um, so when you click on ATM strategy, all of these should be in place for you. And then it just depends on which market you're trading. Cool. So do you have set stops and targets or do you adjust them? You adjust them, right? Going for mid bands and stuff. So there's a couple ways to do it. Since you never know what your target's going to be exactly, if you're trading crude oil or the S&P, any one of these 12 tick stops is great, right? And they're going to put your targets out $100, $200, $200, $300, depending on what it is. And it just gives you time to react. There's really not much to set up. Highlight the one that you want and let it run. It'll put stops in place. It'll put targets in place. And then let's say hypothetically, I've got my S&P 2 lot in here, right? And I go short. And my stop is in place and my targets are in place. But suppose I need to change my stop because it's at a mid band inside of favorable large triggers. I can click on it and I can move it where the market shouldn't go, right? And if I need to move my target because maybe there's something in the way, I can click on it and I can move it. And same thing with my second target. I'm kind of floating out here in the distance. Maybe I say if this area breaks, I'm just going to hold one for down here. So you can move stuff around like that. But it all starts with just making sure that you have something in the drop box. And then if you want to create one, if you want to make your own custom, let's see if that's the next picture. You hit My Settings. Chris, no worries. So let me see. You're asking the ticks that one situation may allow. Sure. So let me go back to the other picture. We'll just go through it like this. We'll do the 2 lot, 12 stop, 16 and 20 target, right? That's something that I would use on the S&P because it moves in 4 ticks per point. So let's break each one down. So 2 lot or 2 quantity means that you're trading 2 contracts. And then the second one that says stop, 12 stop, means that you're willing to let the market go 11 ticks against you. On the 12th tick, you're out. And then your targets, 16, where it says target 16. So if the move goes 16 ticks in your favor, you will exit your first contract. And then what was the other one? 24? 24 is second contract exit. So each of these is different, right? So 12 ticks is perfect for crude oil. 12 ticks is perfect for the S&P. And it's important that you remember that it's not a matter of if I get into the market, it's set at 12 ticks. but you need to click it and put it where the market shouldn't go, right? So that 12 ticks buys you time to put the trade where the market shouldn't go. That 12 ticks gives you enough time to put it outside of the window of opportunity. And then the same thing with the targets. That's $100 and $200 targets. But let's say that there's just something going on. It's super strong. The path is clear, and you're like, well, hell, there's no reason for me to get out at 100. I'm going to put another one even lower, and I'm going to let that first target be the fib with everything going on, right? So you can adjust in the moment as well. And then as soon as, if this one gives me a reversal bar, and this isn't high probability, guys, this is directly into a termination condition. If it gives me a reversal bar, then I'll do the same thing again. I'll adjust again. I'll grab my stop, and now my risk is even less, right? And I'm anticipating with all this momentum from the areas with the potential to break, let's see if it gets down to this Fibonacci area. But it's still not a clear path on that divergence low. But in my bar fight, I have enough reasons to potentially take the trade. And if I was looking for the $100, well, we already made that. And if I'm looking for the break even, well, then I'm already there. And if I'm looking for the 200, where'd we get in? 85.75, 81.75 happens to be right there at Fibonacci support. So I can adjust everything based on what's happening in the moment, based on my management plan. Maybe I'm getting close to an area and I'm not willing to give $300 back. I might say, okay, if I get a reversal bar this close to a fib, maybe I'll take profits, right? Or if price starts trading back above those small triggers, there's a million ways to do it. Or I might just say, you know what? I'm not touching anything. They're going to have to hit my stop, or they're going to have to hit my target because I believe in this trade that much. Does that make sense? So the initial one pretty much gives you reaction time. And the targets are predetermined, but they can always be adjusted. I could even say, I'm terrified. I'm going to jump out because of the fluctuation. And then you can jump out of the. Does that help? Is that kind of what you were asking? Okay, so what you're talking about right here, 2 is how many contracts that I'm trading, right? Yeah, there's a little assumptive in there. It assumes that you understand that your stop is 12 and that your targets are 20s. And this shows you that you're in 2 contracts. So I have to I have to buy 2 contracts to be the other side of the sell, right? I sold the market. In order to get out, I have to buy it. If I buy 1 contract back, now my stop is 1 contract, my entries are 1 contract. And if I move my stop right here where it should get hit, then it pulls me out. Cool. Great question. And then D-Rock, that was one of those bar fights, right? You're welcome. Do you have so many things going for the trade? Were you willing to take it? Because you knew where it was going, right? How do I keep my trades? Save them? Oh, okay. Great question. So you're going to right click, Anthony, and go to data series, whether it is NinjaTrader 8 or NinjaTrader 7. And if I scroll all the way down, plot executions. Right now I have it on text and marker. If I do it just markers only, watch how the text goes away, but you can still see the arrow on the left showing entries, the arrow on the right not doing it. And where you're at right now is probably do not plot, which makes everything go away. So I'm a huge fan, especially for you guys posting in the room, text and marker, because it shows you exactly where you got in. It shows you exactly where you got out. It makes it easy to do the math. And more than anything, Anthony, is it makes it easy for me to see on your charts where you took your entry, right? I can see exactly which bar and where on the bar. So I know if you got in on the way up or you got in on the way down. I know if you got in early or if you got in late so that we can talk about it. Yours is, which is black? What is black? Your background? The text and marker? Hell, I don't know. Let's find out. Chart Trader Properties. I right-clicked on the gray over here, and I brought up the properties. Let's see if we have it. Stop loss is red. That's not the actual text. Those are the buttons. All right, it's not on there, so let's go to data series. I don't know. I've never been asked this. Let's check out. Visual, price marker color is black over here. That's that one. Trades, blue, magenta. Boy, you know what, Anthony? I have no idea, my friend. Who else has a Ninja Trader 8 trade up? Let me find a picture of a Ninja Trader 8 trade. Chris, are yours black? Yours are black on Ninja Trader 8. All right, now let me check mine, Anthony. It may be a Ninja... Ah, mine are white on Ninja Trader 8. I'm not sure. Hey, D-Rock, have an awesome weekend, man. I'm in town for a few weeks. Chris L, take care. Um, if I find myself with time to golf, I'll send you a message. Be fun to meet you face to face. Go swing some clubs. Cool. Chris L, have a good one. Anthony, I really don't know. I imagine that there is a way. You could send Jason a message in tech real quick. Um, he probably knows. I've never even thought of changing them. But it seems like it would be in data series. There's your executions for it, but I don't see any way to change the color on it. It's harder to read in black. I'm the same way. I don't know how old you are, but the contrast that white creates is easier for me. Um, we'll just see. Send Jason a message. Watch this. Let me get you the link to tech. He's got a few people ahead of you. And I'm sure you've worked with him before. Jason's amazing, but he knows these answers almost instantly. I've just never had to do it. This is where usually Cam comes in and saves my bacon. He's really smart too with this stuff. Good stuff. I'm gonna ask the whole Nexgen group and ask them. All right, so we'll see if we can get some answers on that one. Debbie, you took my trade. It was a good one, wasn't it? Perfect entry, virtually no risk, quick profits. And then I'm guessing predetermined stop, right? Predetermined stop. Beautiful trade. I love it. All right, and Anthony, Chris Novak. But that's not script. Hold on. That's target one. I like it. Let me see if I can get Chris to elaborate real quick. None at all, Gary? Go back and circle tails. I feel like there may have been one or two in there. I could be wrong. And then Anthony, that's what Chris sent me, but I think this is exactly what we saw. Um, Here, let me get. I'm having a conversation off to the side here with my nephew. So let me send him your picture real quick. Oh, and he just gave me the not sure about that. All right, no worries. We're gonna get it. You know that, right? We are gonna get it. There was one that you missed. So there were trades for you. You just missed one. That's okay. We miss them all the time. Good job not trying to make something up. And then crude oil's just stuck. We're gonna get a village on it, Anthony. Let's do this, because there's nothing to do in the markets, right? Um, Changing font color in Ninja Trader 8. To adjust the colors for the P&L display, you'll have to create a custom skin in there. There's not a default option. So it looks like you're going to have to create something on your own. Sorry, man. Here comes John Novak, though. He may know the answer. John, can you hear me? I see you typing. Tell you what, guys. No, it's not too much trouble at all, Anthony. It's really not, because this is one of those things that there may be 50 people wondering. And if I can find the answer to this one, it just makes me look smart later. And I don't get to do that very much, so it'll be fun. Guys, take 5 minutes. John, you took one short. We took the same one. That was it, right? Because of the great top, because of the momentum, because everything said down, we actually did a full talk on the bar fight scenario. John Novak took the same one and got out the fibs. Nice trade. Whoo! Gary, have a safe weekend. Hope the MRI is all good news. That was the one you missed. That's all right. So guys, let's take 5 minutes. Let's stretch our legs, stretch our backs, blink our eyes, grab a snack. I will be back in about 5 minutes and we'll finish strong, guys. So if you have questions, get them ready for me. If you don't have questions, it's going to be a pretty quiet class. Back in a few, guys.